Hello, traders from whichever side of the country world you're watching me from. Welcome to today's morning market call. My name is Ian Joseph Elkington, market analyst at HFM. Now, a quick disclaimer before we do begin. The information herein is only meant for educational and informative purposes only. None of it should be construed as investment advice. Trading the financial markets do carry a degree of risk, but don't worry, I'm here to help you comb the markets the right way. Now, today is a very interesting day. Start of the week, so to say, being the 6th of this month, whereby once again we do have a few promotions currently ongoing. If you go over to your HF website application under the promotion sector, we do have the pure gold giveaway, whereby it's going to end in the next 2 days, 2 hours and counting, whereby we are going to give away 10 grams of pure gold for those unlimited winners who have hit the target, set it and win it. Once again, you would have gone to your HF under the promotions pure gold giveaway, trade 100 standard lot size in gold using any account type and hit the target, and you would have won 10 grams of pure gold. Now we have headed into round 2, or battle of the elite, whereby you have one more chance, the second chance, round number 2 out of 5, whereby you have an opportunity to become Kenya's Dawn of Biz, claim the crown. 650,000 Kenyan shillings waits for number 1, whereby once again, number 1 is going to walk home with $5,000. Number 2 is going to walk home with $2,000. Number 3 is going to walk home with $1,000. We are going to have 10 winners in the lucky draw, walking home each with $200. How do you join? You go over to your HF under the promotions battle of the elite, join the round 2 and join the promotion. Deposit at least $100, trade any asset and rank in the top 3 traders by percentage wise. Once again, we are going to have 10 winners in the lucky draw who are going to walk home with $200 each. Now the tab has not yet been updated, but going on to another promotion, the first 5. Once again, this is round 2, whereby you have an opportunity to win up to 325,000 Kenyan shillings in the prize pool, whereby it's not only a marathon, it is a sprint, whereby speed is everything. The first one to trade will be the first one to win, whereby once again you go over to your HF under the promotion segment, join the first 5, round 2, and join the promotion. Trade 150 lot size in forex, gold or silver using any trading account type, and be one of the first 5 traders to complete the trading requirement by 22nd of October this month and stand a chance to win 65,000 Kenyan shillings. Very beautiful. All provided for you by none other than HFM, celebrating 15 years in the market, providing you with the best platform, with the best products as a trader. Now, when we go over to our morning market call, whenever we start our segments, we usually look at the economic calendar. This is whereby we generate our ideas from. When you wake up in the morning, you look at what the economic calendar has in store for you. You look at news headlines. How could this provide me with opportunities in the market? Now, starting off with Australian dollar, on Saturday, they did advance their daylight savings time, which is very, very important for you as a trader. Now, how is this information possible? If I go over to my forex market time converter, as you can see, Australia now opens at exactly 12 a.m. in the morning. Last week, Australia used to open at exactly 1 a.m. in the morning. Now, this is very important because now the charts are going to be active from 12 a.m. in the morning compared to 1 a.m. in the past. Now we will go over to Frankfurt, Germany by the end of this month, which is going to be exactly on the 26th of October, whereby they're also going to advance their DST, where currently at the moment they do open their markets at exactly 9 a.m. in the morning. As of 26th of October, they are going to start opening their doors at exactly 8 a.m. The same could be said with London, whereby currently at the moment they do open their markets at exactly 10 a.m. in the morning. By 26th of October, they are going to open their markets at exactly 9 a.m. We are going to finalize with New York, but New York is going to be 2nd of November, whereby they are going to open their markets at exactly 4 p.m. instead of 3 p.m. Now, this is very important because it's going to shift the news releases, it's going to shift the market opens, which is very important for us as traders. Now, moving over to the headlines, Japan just appointed their first female prime minister. And if elected, Takaichi will face a host of issues, including one, aging population and a lot of economic uncertainty in the market. Now, she has been elected as the head of Japan's ruling LDP party, which is the Liberal Democratic Party, and therefore is the next prime minister. Now, a vote in parliament to choose the next PM was held previously, but she will be sworn in officially. She is 64 years of age, and we want to look at how the markets did interpret this data. Starting off with the yen. The yen did take a beating, and we are going to look at the charts in just a few moments' time. I have just started a segment whereby I want you to engage with me, which are some of the assets that you would want me to look into the markets. Now, the bonds did sell off as Takaichi wins pass bet on fiscal easing. Now, the yen tumbled the most against the US dollar in 5 months on Monday, which was Asian Open today, as Takaichi won the LDP leadership election over the weekend, setting the country on course for more expansionary fiscal policy and complicating the task facing BOJ. Now, the yen did sink almost 1.95% to 150.35 against the dollar, the biggest one-day slide since May of 12 this year, wiping out the gains it's made in the past 2 months. Now, against the euro, the JPY fell 1.7%, the weakest since the creation of the European single currency. Now, the coming days are going to be important to gauge her policies and from other potential members in her likely cabinet. Moving over to another news article. Now, it may delay but not derail the Bank of Japan rate hikes. We have been seeing the economy of Japan moving in the right direction, and when she is appointed into chair, they do bring their own policies that they do want to enact, and we will want to look at how this is going to affect the central bank policy. In this case, we are going to look at Bank of Japan. Now, advancing expansionist economic policies, chances have risen that the central bank will avoid raising rates this month. Very interesting, though the pause may not last as if it batters the yen. Now, Takaichi likely to become Japan's female leader next week after being swearing in, stood out in the race as the only proponent of big spending and loose monetary policy. Parliament is expected to vote the Conservative Nationalists in as premier on October 15th, since her Liberal Democratic Party is the largest in parliament, though this is not assured as the LDP's coalition lost its majority in both houses under her predecessor, Ishiba. Now, the new leader complicates, very interesting, the new leader complicates Bank of Japan rate hikes. Upon winning the race, Takaichi made clear the government will take the lead, very important issue. The government will take the lead in setting fiscal and monetary policy, and that a priority will be to reflect demand and broader economy. Now, political waves, once again, as a result of her being sworn in, we did see a lot of things happening during Asian session, whereby Japanese stocks did surge more than 5% to an all-time high, while the yen did skid on Monday after fiscal and monetary dove Sanae Takaichi was elected. Gold climbed to almost 4,000, while leading cryptocurrency Bitcoin rallied to a lifetime high on Sunday, with investors increasingly turning to alternative assets to a store of value as the US government shutdown continues to the 6th day currently at the moment. Now, looking at the Fed Watch 2, in the next 23 days, 10 hours and counting as per the time of recording, we are going to anticipate the Fed Reserve to once again come back to the table and release their interest rates. There's a 95.7% chance that we might see interest rates being taken further even down to 375 to 400 basis points, while there's only a 4.3% chance we might see interest rates being held where they are currently at the moment. Now, one important thing to keep note of, we only have 2 Fed meetings this year, which is going to be 29th of October. Then the final one is going to be 10th of December, whereby once again, the current rate is at 400 and 425 basis points. And there's an 84.1% chance before the year does end, we are going to see interest rates being taken even further down to 350 to 375 basis points. Now, looking at oil did rise almost 1% after the lower than expected OPEC plus the output hike. And this is very interesting, whereby once again, OPEC planned production increase for November was more modest than expected, tempering some concerns about supply additions, though a soft outlook for demand is likely to cap near-term gains. As Brent crude futures jumped almost 67 cents, and you're going to look at the charts in just a few moment time, while the WTI crude was at 61.54. Now, this price jump has primarily boosted OPEC's decision for a lower than expected production hike next month, as the group intended to buffer the recent slump in oil markets. Now, we are heading into a season whereby they would want to start maintenance on these oil rigs, and we would want to look at how this is going to affect the production of crude oil. In the run-up to the meeting, sources say that although Russia was advocating for an increase of almost 137,000 barrels per day to avoid pressuring prices, Saudi Arabia would have preferred double, triple, or even quadruple that figure to regain market share more quickly. Now, in the near term, some analysts expect the refinery maintenance, which I've just mentioned, starting soon in the Middle East to help cap prices. Higher than usual refinery maintenance across the Middle East in Q4 will leave more crude oil available for shipment, further contributing to the prospect of stronger volumes, said Sentosa's shipbrokers in a client report. Refiners elsewhere could also limit their oil intake during the shutdowns. Now, I want to switch over to the charts. This is whereby things get very interesting, whereby we want to look at how the markets have reacted to what has happened today ever since the markets did open during Asian session. Now, once again, there's a lot of activity that has happened over the weekend, starting off with Japan electing the first female prime minister currently at the moment. And we want to look at the charts, starting off with the precious metal gold. Looking at it from a weekly perspective, gold is trading at all-time highs, whereby we have been trending to the upper side. Looking at it ever since the markets did open earlier this year, gold has had the best rally ever, whereby it's almost 50% up in less than 39 weeks. Very interesting. And we still have just started the Q4 of this year, the final quarter of the year, and we want to look at how gold prices could potentially close by the end of this year, anticipating that the Federal Reserve are going to cut interest rates even further. How is this going to affect oil prices? Now, we were looking at this region of resistance last week, whereby we were looking at $38.95 an ounce on gold, whereby we had identified if we do close above this region, there was a high possibility prices will continue moving further to the upside. And ever since the markets did open today, we did see this bullish candlestick closing well above that region of resistance that was formed last week on Thursday. And it has been a very decisive factor, a very interesting region for us at the moment, whereby prices are trading well above that region. If I can pull a Fibonacci from the opening price to where the high of the candlestick is currently at the moment, I would want to see a short-term retracement back into the golden Fibonacci retracement just around the 39.07 region for further continuations to the upper side. On the other hand, if you do close well above this region, I would want to look at more long opportunities. Now, very important thing to note is that yes, the US government is on its 6th day of total government shutdown. Things are escalating very quickly at the moment, whereby once again there is over 750,000 jobs which are going to be furloughed currently at the moment, and analysts have it that the United States could be losing at least $7 to $15 billion as a result of the government shutdown that is currently ongoing. Now, this is very interesting because we have been seeing GDP numbers coming better than anticipated, but analysts have it that for every week that the US government is shut down, it could be taking at least 0.1 basis points on the GDP per week, which is quite amazing looking at it after coming from the positive data. Now, once again, I would want to look at more net long opportunities if gold does come to the golden retracement region, which is in between the 50 and the 61.8 region. Looking at the silver metal, silver has been rallying to the upper side after the massive dip that we had on Thursday last week, whereby we did see the metal lose against the dollar, whereby prices did fall almost 4.46%, but markets started recovering slowly by slowly. Currently, silver is also trading at all-time highs at 48.6. Now, the ceiling has been broken. The question is, where could be the next potential targets on such metals, whereby currently we are at $48.6 an ounce on silver. I would want to look at 50 0.0 ounce, which could be the next psychological level in the markets, whereby this is the next likely target that the silver metal could go to. Looking at it from this perspective, once again, yes, we are anticipating the Fed Reserve to cut interest rates twice at least before the end of the year, which means that investors will want to look at safer havens, including the silver metal. Let's jump ship quickly over to the dollar index, whereby we did see the dollar index gap up ever since Asian open today, quite significant, and this was the result of the markets anticipating the weakness in the Asian pairs, whereby we did see the markets gap up almost 0.42% ever since Friday's closing price. Currently at the moment we are trading well above 97.8 region on the dollar index. If we do have these candlesticks closing well above this region, I would want to look at more net long opportunities. Hello SK. Now this is very important because it's going to affect what is currently happening, and I would want to look at the 10-year treasuries, whereby we have seen the 10-year treasuries. If I can go to the weekly perspective, let's go to the daily. Ever since the year has begun, we have been seeing the 10-year treasuries offering at least 4.8%. Let's go to the weekly perspective. Ever since the year did begin, the 10-year treasuries from year to date, currently at the moment, the 10-year treasuries are offering 4.76%, which is quite interesting. It is a good yield looking at it from this perspective, and economists have it that this could be one of the key reasons why the dollar is still strong at this moment in time, whereby the 10-year treasuries, the yields are looking attractive for investors, whereby they will want to park their money into the yields, anticipating that in the economic uncertainty that we are anticipating currently at the moment, their money will be safe on the treasuries. Now, looking at US dollar against the Japanese yen, very interesting. Starting off with the Nikkei 225. Let's start with the Nikkei 225 before going over to the US dollar against the Japanese yen. Now, looking at it from this perspective, the yen, the Japanese Nikkei 225 is currently at all-time highs. We have never traded on these territories, whereby during Asian session, just after the markets did open, after Japan did elect a new prime minister, Takaichi, we have seen the Nikkei 225 currently trading above 48,550 region. This once again is an all-time high. Looking at it on the daily perspective, yes, we are currently trading at all-time highs. Now, this is the result of equities looking at this information positively, whereby if Bank of Japan do decide to hold the interest rates and not increase it, this means that there will be more profits for these companies, for these 225 companies that constitute the Nikkei 225, as a result of the Bank of Japan lowering or holding their rates currently at the moment. We will anticipate prices continuing further to the upper side, because these companies depend a lot on borrowed money. If they are going to receive loans at a cheaper price, it means that these companies are going to have more in terms of profit share, and as a result, we did see the Nikkei jump quite significantly ever since the markets did open. Once again, ever since the markets did open, from Friday's closing price to currently where it is trading at, this is almost 4.73%, which is quite significant. I would want to look at prices coming back slightly down to the opening price for further continuation to the upper side. If I can pull a Fibonacci from last week's closing price to today's high that was made, I would want to see prices coming back into the 50 region for a further continuation to the upper side. While on the other hand, looking at US dollar against the Japanese yen, once again, we did see most of the markets did gap to the upper side as a result of the political uncertainties that we did see happen, especially once again with Japan electing a new prime minister, the first female prime minister. Looking at it from Friday's closing price to where we are currently at the moment, the dollar has gained against the Japanese yen almost 1.8%, which is quite significant, whereby I would want to look at short-term retracements on the market once again, anticipating prices will come back down to at least the opening price of today's Asian session for a further continuation to the upper side. We have seen the yields on the 10-year treasuries on the dollar becoming really nice, attractive ever since year to date, and we would want to anticipate that if at all she is going to come with monetary policies that are going to be dovish or hawkish for the economy, the markets are going to react accordingly. But currently at the moment, investors are offloading their positions, whereby we have seen investors short selling the bond market of the Japanese yen currently at the moment as a result of the economic uncertainty, because she who is going to come with new monetary policies, which is going to affect, as we have just looked at an article here, she would want the Bank of Japan to align with the government policies. Very, very interesting. Now, looking at GBP against United States dollar, whereby the markets did gap to the downside, we have been seeing the dollar strengthened ever since the markets did open today, and we were looking at two interesting regions last week. The region of interest currently at the moment is 1.34577, whereby we had the markets gap to the downside, retraced back to the upper side into the golden retracement region. Currently at the moment we are testing the 50, the golden retracement region on the Fibonacci. I would want to see prices continuing further to the downside if the uncertainties do persist, whereby we have a very good range of almost 27, 28 pips currently at the moment if the markets are going to sell to the downside. This is all going to be dependent on how these 1 hour candle is going to close. Once again, this is just London open, whereby we're anticipating a bit of volatility in the markets, and usually London forms the high or the low of the day. Currently at the moment, looking at it, we are 50% on the gap that was formed from Friday's closing price to where we are at the moment. I have just started a segment whereby I would want you to engage with me. Which are some of the assets that you would want me to look at? I have looked at the precious metals. I have looked at the Nikkei, the Japanese yen. We have looked at the British pound, which are some assets that you would want me to look into. Put it in the comment section. I'll be glad to answer you. I would want to go over to oil, starting off with Brent, UK oil, whereby once again we did see UK oil jump to the upper side ever since Friday's closing price around this region to today's opening price. We have seen the precious commodity black gold jump up almost 1.67% ever since the markets did open, and this was the result of OPEC not having as much of reserves being deployed into the markets as we would have anticipated it to. Now we are heading into maintenance season once again, whereby most of the oil refineries are going to go through maintenance. Now this is very important. Okay, so Sele wants us to look at Nasdaq. We shall look at that in just a few moments time, whereby once again these rigs do pump oil from the ground. Now whenever they pump oil from the ground, they do put them into storages. Now if they're not going to pump oil, the oil that is current in storage is going to fetch a higher price because of supply and demand, whereby the supply is going to be minimal, and then we are going to have a larger demand as a result. We do anticipate oil prices to continue moving further to the upper side. Now, we did receive news releases from Russia, whereby they were anticipating to cut oil supply very drastically towards the end of year to stabilize oil prices. Now, the tensions in the Middle East are currently ongoing, but we are anticipating that in the near future there could be peace talks. We just did see Gaza release a few hostages, people who belong to Israel, and this is a good step in what we'll do to look at in terms of oil prices, because once again, when you look at these commodity, who are some of the biggest producers of oil, the Middle East accounts for a majority of that. Now let's look at Nasdaq, which is US 100 currently at the moment. Last week we did have a beautiful retracement on the Fibonacci level, whereby prices did come back up into the golden retracement region for a further continuation to the upper side. Now, ever since the markets has opened, yes, we did gap slightly to the upper side, but looking from last week's closing price to where we are currently at the moment, Nasdaq is up 0.48%. If we do get candlesticks that closes well above the all-time high at around 25,000, I would want to look at more net long opportunities. Now, in Fed Chair Jerome Powell's speech recently, which was sometime, I do believe on the 15th to 17th of last month, September, whereby he did mention that stocks are highly valued at the moment. Hello, Pizzo. Stocks are currently overvalued, but does this mean that they would want to sell as early as now? No, not yet, because we are looking at, yes, they are at all-time highs. Looking at it on the weekly perspective, Nasdaq has never been on these territories. Ever since the year did begin, we did see Nasdaq lose quite significant, almost 30%. This was considered a market crash when Mr. Donald J. Trump did enact tariffs, and the markets digested this data negatively. But ever since that point, we have seen the biggest rally on Nasdaq, almost 51.98%, and this is the result of the tech-heavy industries posting a lot of gains. We have been seeing Nvidia take a very, very huge stride in the AI development. Most of the companies in the Nasdaq are currently doing superbly well, and they are not being affected with the United States shutdown currently at the moment, because when you look at these companies, most of them are private equities, meaning they are once again not going to be affected with the US government shutdown. Now, from Jerome Powell's speech last month, they are highly valued. But does this mean that we are going to see selling opportunities currently at the moment as early as now? No. But we do anticipate a short-term retracement when investors start their profit taking towards the holiday season, which usually comes towards the end of the year, whereby I will anticipate a short-term retracement on the Nasdaq. But currently, at the moment, Nasdaq is firing on all cylinders, and I would want to see potential prices further to the upper side. Once again, if you do break 25,000, which is a psychological level in the markets, I would want to see prices moving further to the upper side. The same could be said on US 500. Whereby the price action is currently similar to what we are seeing on US 100, whereby once again, most of these stocks are at all-time highs. Looking at how the weekly candlestick has opened up, it did gap to the upper side, and I will want to anticipate the movement further to the upper side once again. If the Fed Reserve do decide to cut interest rates, then yes, it means that these companies are going to get much more profits in return as a result of borrowing. Now, when you look at these companies, when the US 500, they do depend a lot on debt. If the Fed Reserve are going to lower the interest rates, it means these companies are going to access the loans at a cheaper price, which means that potentially it will be more profit for them. I don't have any asset that I'm going to look at currently at the moment. This session will be updated on the YouTube channel as the day advances. Now, I want to talk about the Shield 500 account, whereby it is a brand new account that we have launched as HFM in the spirit of 15 years celebrating providing new traders with the right platform, whereby if you do open a Shield 500 account and deposit anywhere between $100 to $500, whatever losses you incur within the first 25 days, we HFM will refund you up to $500. Very interesting. Go over to the HF website, look at the promotions that we currently have ongoing. I shall see you in the next segment. Remember, once again, we do have classes at the Oval Office, Westlands, 5th floor, Offering Road. These classes are totally free. They are paid for you by us, HFM. I shall see you on the next segment.